Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the markets. So today we prepared 3 videos as usual, so on Forex, gold and Bitcoin. Starting as usual from the Forex. So on euro currency actually you could see what has happened. So based on the data that has been released recently, euro currency just has confirmed our worries that something goes wrong. So at least the points that we have specified yesterday is the last chance for the euro to start our prediction, and actually we said that we're not intending to take any new longs based on the current performance. So all levels that were suitable for possible taking long position has been worked out by our attention. So we have taken a position in all these levels that were suitable for that. And it's the point that actually that we discussed yesterday, it already was some kind of the marking, so that euro currency was have to stand above. So but that actually hasn't happened, and you can see that's our direction stands here. So currently I wouldn't hurry up with the attempt to buy the dip immediately and watch for more progress here because of the 2 moments. First is tomorrow we will get the payrolls. Second is the data that we've got recently, it will have long-lasting effect. So on the first glance it brings nothing really surprising, because markets based on reactions, you can see how what reaction has followed. In general, we're prepared for that, and we also talked about this many times, especially watching for charts of the inflation expectations and so on. But the one thing is to be prepared, and quite another thing is to get the real confirmation, especially from the most conservative indicator, which is the personal consumption expenditures index. And as you could see, the core number stands and was increased higher, revised to the upside, to the 3% inflation. So what does it mean? Together with the negative gross domestic product numbers, which we also warned about, due to the significant drop in the consumption, it was just not able to get another result based on this. So together it means stagflation. So slow down together with the rising inflation expectation, and it brings nothing good to the United States economy. So taking it all together, despite the changings and revisions were not really very significant, in the current circumstances, I think that market could keep going slightly lower. And here we return back to our idea and watching for an area with actually 30% spread, 1250, 112 area. So where the daily oversold stands. And here we could start watching for something. Maybe on intraday charts we get some bullish patterns that could let us to take the position, at least for intraday trading steps. Here you can see trend stands bearish, market is not oversold. Triangle, an attempt to moving higher, has not been realized, although it was due to the external impact, but still result is the same. On lower time frame, on the 4 time frame chart, here's what we could consider the nearest standing targets. So first of all, nearest one, I think that here we also could treat this action as a butterfly. Why not? So it might be the 1270. Next one will be 1225, downside extension, if it will work. At the same time, on the hourly chart, we have the ABCD pattern to the downside. This is actually how everything has happened. So here we said this last point, we will not consider taking the position. Just if you would like to, you could keep your existing positions with the break-even stops and watch what will happen. And you can see that after the data has been released, market starts dropping. Now it stands at the COP target, 1290. OP stands around 112. So that's why on the daily chart, the area between 112 and 112.50 is becoming interesting for possible patterns that might be formed here based on the intraday performance. Besides this, some kind of the hand and shoulders pattern, if we will treat it in this way, has to be completed somewhere also around 112. In the current situation, since on the euro currency, well, as I said, I think that we should not be too hurried with the decision making on the buying any dips that have been formed, hoping that will be immediate reversal. On the Forex market, I would consider the pattern that I have shown you yesterday. In particular speaking, this is the daily double repo on the Great British Pound. So you can see that today it could be confirmed. Market reacts on the recent data in the same way, and now price stands below the 3x3 moving average. So if market will close here today, this pattern will be confirmed. If it will work normally, it suggests at least the 50% retracement of whole upper direction. So it will be somewhere back to the 130.50. So that will be the destination point. Also, we have to keep an eye on what will happen if we will see some signs of the failure. For instance, market after close below 3x3 return it back up and close somewhere around this area, closer to the top of the pattern. That might suggest upward continuation. But in the current circumstances, especially with the chances to get worse payrolls tomorrow, it's really might be really could work really nice. So I mean in normal direction. Why this pattern is also interesting and why I think that it might be reliable, because take a look at this performance here. It's very interesting. So first of all, you could see and you could recognize the flat tops right here. So they are equal. This is important. But what is really more important is that if you take a look what has happened compared to the previous high, here we have minor washing brains of the previous stops. So stops have been grabbed, market collapsed. So this is also bearish sign. And that makes me think that this double repo could work in a normal direction and could reach the target. At least it's definitely one of the patterns that is worth of our attention. So that's what we have currently on Forex. On euro currency, I suggest that it makes sense to wait a bit for more reliable and stronger support area where we could start searching for some chances for position taking. While on the Great British Pound, we could keep an eye on this double repo pattern that might be really, well, potentially interesting.